Hello, and welcome to another episode of Big Moves, Bigger Conversations. This video, I'm setting the standard, should be my most watched video. Who is my audience for this video? Anyone who is in the process or considering purchasing a home. If anyone around you is saying, hey, I'm considering getting a home, you need to forward them this video. Please, expeditiously. I am going to structure this recording significantly different than I do my other ones because I want to get the facts out. And then towards the end of the episode, I'll provide context around additional steps. But because people's attention spans are not always there, I want to get the information out. And then if you have questions, you can dig in. Okay. Why am I so passionate about real estate? I'm really passionate about real estate because I see the benefit of owning a home, being able to utilize this as another way of getting additional financing and or funding. And I want more people of color not to be intimidated by the idea of purchasing a home. Now, if you're just like, hey, Sasha, I enjoy renting. I don't mind renting, but I also have a home. Two, want to just make it clear. It's not that you can't afford a home. It's not that, like, as long as the reasoning isn't, I can't afford the home and it's, I don't want the home, fine, good. But for anyone that's saying I can't afford it, the process is overwhelming, or I don't understand, like, that is the audience that I want you then to forward this podcast to immediately. All right, so let's get into it. The first step before you look at homes, before you go get your pre-approval, before you even, like, the moment you say, I want to buy a house, the first step you should take is to go to annualcreditreport.com and pull a copy of your credit report. If you are unable to go to annualcreditreport.com, you can also call and order for a free annual credit report. You are given this yearly. This is the only website authorized by the federal government to provide free credit reports. Great. The number is 1-877-322-8228. Okay? And you'll get that by mail. Step one, before anything. After you get your credit report, another thing that I typically hear is, oh, my credit score isn't great. You do not need a 700, a 750 to qualify for a home. Debunking that myth. I'm going to just share some minimums. We are in 2025, so you do need to be considerate of that. You can have a credit score of 500 and qualify for a home. Now, the lower your credit score, the more they're going to ask in your down payment. That is something to consider. So, on average, if you have like a 620, a 640, anything 650 and above, you're good. You're in that 620 minimum, you're at the minimum. So there are going to be things that you need to be cognizant of from a down payment perspective. But that is also not a hindrance. Why? Because they have programs dedicated to individuals that don't fit a certain profile, and you actually can qualify for additional funding. So I don't want to lose you guys yet. Again, there's no excuse. If you have over a credit score of 500, right? If you want to get a typical FHA loan, and you have a credit score of 500, they're usually going to ask for like 10% down. If you have like a 580 or so, they may ask for like 3.5% down. Again, do not get discouraged at the fact that you're hearing put down. Why? Because there's usually additional ways to finance your down payment. Stay with me. There are a couple of types of home loans. You can get an FHA loan, a conventional loan, a VA loan, a USDA loan. And again, all of those vary based on the type of credit score you have. That's why step one is understanding who you're going to see. Now, step two, determine your budget. If you're renting, you'll want a mortgage that aligns to what you're paying in rent. Why? Because you can afford it and you've spent at that level and you know what it takes. Now, if you are already struggling to make your payment and you're renting, that is not the amount that you want to target. Why? Because unlike in renting, you're going to need to start to create that buffer, that additional saving to help you when things go wrong. Because owning a home, things always go wrong. It's just a matter of timing as to when. All right, so you're going to determine your budget. Next, you're going to go out and you're going to get a pre-approval letter for a mortgage. This letter doesn't really mean anything. It simply means based on your gross income, this is the amount that we would likely approve you for. This is not a guarantee. This just shows your real estate agent good faith that you are actively pursuing and that they did a preview of your finances and said, this is what you'll likely get. Things I want you to be considerate about when you're looking at that pre-approval letter, you do not need to aim to max out that pre-approval amount. Let me give you an example. Oh, no, I'm not giving you an example. I'll save that to the end, but we'll circle back on pre-approval. I'm going to stick to my just giving you the facts. Next, you're going to find a real estate agent. If you're not sure where you're looking or what kind of home you want, this is when you need to figure out, who do I trust? You need to trust your real estate agent. Do not listen to me. Go get a friend. This is not the time where you want someone that you're just like, I know he or she does real estate, I'm going to use them. No. Find someone that is knowledgeable. Is it a plus if that person is knowledgeable and your friend? 10 out of 10, highly recommend. But if it's somebody who's just starting out and this is your first time purchasing a home, that is not your person. And I'm saying that with love. Why? Because the home buying process is long. And you want someone, especially if you don't feel as knowledgeable about the process, you want someone who has sold homes. I'm going to, at the end of this, give you common questions you should ask your real estate agent to determine if you should utilize them. Next, start house hunting. You need to be house hunting with your real estate agent as well as on your own. Go and look in the neighborhoods that you're interested in living in and see if any of them are selling them as individual homes. Like homeowners can also sell their property and they're not posted on these various websites. So drive around, figure out what area, figure out what are you looking for, right? Then after you find a house or you and your agent work together and you find a house, the next step is making an offer. Again, this is heavily going to be driven on what the market is calling for. So after you make an offer, and if you go like the credit union route, they'll make sure you do a home inspection. Why? Because the basics of buying a home, you're purchasing a home, the bank is financing your home, the house is the collateral. Right? And so the reason that they're asking you to do a home inspection is because they want to make sure whatever they're holding as collateral, right, your home, is actually a good home. And so it's not in their best interest for you to get a house that's no good. All right? And so next, once you do your home inspection, they'll come back and they'll tell you and an appraisal, right? Appraisal is huge. The appraisal tells you this is what your home is worth now, right? Based on the market. So this is something that people are not really as knowledgeable about. The seller you can put a price point at your home of $700,000. If your appraisal comes back at $450,000, most cases no one is going to pay more than the $450,000. Why? Because it doesn't make sense. Your house will essentially, you would be going in and it not be advantageous for you, right? I'm not going to go into the details of that, but in a buyer's market, you can negotiate that $450,000 down even further. In a seller's market, because of the competitiveness across buyers, some people may pay over the $450,000, but not substantially, right? And if you're already at $450,000 and that's what your budget calls for, then that's not the home for you. Take that into consideration. A lot of what we've seen during COVID was these housing wars because the interest rates were so low that people wanted to, inventory of houses was low, that people were able to sort of fight, and the sellers were setting their price. All right. Okay. So next after that, you'll secure your final mortgage approval. Hey, uber important. Shop around with mortgage lenders. What do I find? People are often intimidated or feel like they need to present their best selves when going in and looking for a lender. Let me be clear. Your lender is just as important as your real estate agent. This should be somebody, the bank that you utilize, you should be looking at them and saying, you should want my business. Whatever my situation looks like. If I got hella debt and I got a decent credit score, but I'm ready to buy a home, if they don't see a value in your situation, keep shopping around. The mortgage lender on the other side also are incentivized to sell you a home, to be a part of your home buying process. So if you ever go into a mortgage company and they're looking down at you, or you don't feel comfortable or confident to ask them very basic questions or questions about your financing or what you should consider, or if they're not educated, that's not the lender for you. One of the things that I in looking back at my journey, I was so tied to using a credit union that I didn't shop around when it came to lenders. And I probably lost out on first time home buyer incentives or just programs. I did the credit unions often offer really competitive rates below market, and that's why. But again, you should shop around. You should spend just as much time looking for a lender as you do your real estate agent, because both are equally important. And you want to use a lender that's knowledgeable about your state and understands the full end-to-end process. They need to understand when you have questions like, oh, can this be virtual versus in person? Where's your local branch? Where, like all of those things, your lender should be happy and engaging to answer. If you don't like your lender, that's not the person for you. That's not the bank for you. There's plenty of banks out here that want your business. The seminar that I just went to, it was First Citizens Bank. They were like, we're growing. I'm in Georgia. They were like, we're growing in Georgia. We want your business. We want to sit down. We want to talk to you and understand what your profile is. And even if you're not ready now, we want to help you to get to your home ownership journey. Those are the type of folks that when you're thinking about your lender, you want to go to. Am I saying First Citizens lender is who you need to choose? No, but I'm just saying you want someone with that type of attitude. Next, after you secure, you do all your paperwork. This is not a 2-week process. Your paperwork for securing your home can take up to 30 days. Like, God, this is a marathon to an extent. After you do and you get through your final paperwork, then this is the fun part. You do your final walkthrough. If you guys agree to making any repairs or anything of those, if you agree to make any repairs, or they said they were still working and they were going to do X, Y, and Z, like this is the time that you call those things out. And then you close on your home. Closing on your home is your meeting with the attorney. Your lender is sending over any of your final paperwork. Your agent usually shows up with a gift. Make sure your agent very much so knows that they need to be giving you a gift because they're getting a commission on the other end of this. But this is when you get really excited, and this is when you end that journey of securing your home, and then you move in. So those are all the steps. And I just looked, I think maybe we're 15 minutes into the podcast. So again, forward and say, watch the first 10 or 15 minutes, it'll help you. Bam, done with it. Now, I want to get into some of the additional points. So these are some of the things that I think you should just consider as you're going through the home buying process. I am going to be hyper-focused on your budget. Guys, stop, do not go into this process looking at, I was pre-approved for $400,000, I'm going to get a $400,000 home. No, you are not setting yourself up for success. Why do I say that? Have homes become more expensive? Absolutely. Are we still finding homes that are at the 220, 250, 300,000 and they be what you want? No. Fortunately, the market, the economy, everything is expensive. And so what I want to say to that end is utilize, again, some of the free services at your local branch for where you're banking. Most times, consultations with bankers are free. So just call in and ask. Say, I'm starting my home buying process. I want to understand what I can afford. Also understand, when you get your pre-approval, that is oftentimes based on your gross amount. That is the amount that when you signed your offer letter, that you're getting. That is not your take-home pay. And I need you to be really clear about this. You will get a pre-approval letter based on your gross amount of income. I'm going to give you guys my situation. So back in North Carolina, I applied and got pre-approval for a home. At that time, this is back in 2020, they pre-approved me for $400,000 as a single woman making, I think I was making $120K at the time, and I was pre-approved for $400,000. I knew immediately I was never spending $400,000 on a home. Could I have afforded a home? Yes. Can I still afford a $400,000 home? Yes. Did I buy a $400,000 home? No. Why? Because at the time I had a partner who wanted to do home improvements, and we were looking at this as a business. That is not your situation. What I will say, my guidance to you, find a home you are comfortable with. It does not have to have all of the bells and whistles. Guys, especially for folks who are doing their starter home, there is no home that you'll move in that is your first one that you will live the next 20 to 30 years. That's just not our society. That's just not how things are playing out for our generation. So this home does not need to be your happily ever after, but you should buy a starter home. Your starter home can be $300,000, and no, you don't have white cabinetry with the latest, or you don't have stainless steel, whatever applied. Get out of what you're seeing on television and really humanize your experience. It is a home that you're going to live in it. Does it have the number of bedrooms I need for my family? Does it have structurally, is it structurally sound? You'll know that based on your home inspection. For the appliances in the home, I'm not talking about your kitchen or your refrigerator. I'm talking about the things that matter. How old is the water heater? How old is the HVAC system? How old is the home, and when will I need to replace my roof? These are the foundational components of your home that you absolutely need to be considerate about, regardless of your appliances, regardless of, I don't have a sunroof, or just like, or I don't like the lighting fixtures in a house. Like, guys, focus on structurally. How is the home set up? Are there things that I can see when I walk into this home that I can make it a home? That's what you need to be cognizant of. Are you settling a bit? Probably. But remember, it's your first home. You're doing this to build equity in your home. And so anybody that purchased a $500,000 home in this economy, I don't care what the banker tells you. I don't care what the builder tells you. You do not have equity in that home. You don't. Why? Because you're paying current market, but it doesn't call for, there's been no improvements. There's been nothing that's going to happen within those first 5 years that you're living in that home that's going to call for your house to appreciate in that short frame. And that's what you have to be considerate. You guys are not spending 20 and 30 years in these homes. So in 5 years, when you move out and your house is maybe appreciated $10,000, you're going to feel really silly because you've spent 5 years in a $500,000 home and you haven't gotten any value out. You've lived in it, but you haven't seen it appreciate. And that's what you want, equity. When you hear people say, do you have any equity in your home? That is what you're obtaining. That is what separates folks from, or that's what helps folks in getting generation. It is not in having a home that you're going to sell at market value. Like, no, it's, do you have equity in the home? When I sell it and when I walk away, is there going to be a difference? Again, perspective. The house in North Carolina, we purchased it under market, I believe at like 120, because my partner at the time, he knew the guy selling it. They had a relationship. I had the financing. We bought that home at $120K. It was a townhome. He did all the work in it. We probably spent about 10 to 15K in doing like the flooring, painting, and we didn't even put new appliances throughout. We replaced the things that needed. I think at the time it was like a microwave and the refrigerator, if that. And some fixtures throughout the house. We did install like new toilets and things of that nature. But again, not major U-Haul. But we had the ability to do that because we also didn't drop $300,000 on that house. This was pre-COVID. We made the improvements. We moved folks in. That house today in 2025 is worth well over $220,000. That means I have over $100,000 in equity. When I went to go purchase my second home for us to do this again in Georgia, we pulled the equity from the first home. You can't pull all of the $100,000. You can pull up to 60%. So we pulled $60,000 to pay for the closing cost and do some improvements for that house. Would I have been able to do that had I not had the first home? No. Do you understand where I'm going with this? It's super important to me, as you can hear in my tone, very passionate about this topic, because I think we create these even if it's age, right? I don't know. We romanticize what a home should look like. Should it be something you're comfortable with? Absolutely. But is it going to have all the bells and whistles? No. And if you're saying that I want my first home to have all the bells and whistles, you need to step your income game up and then make sure you can afford it. But don't get in the house and then be overwhelmed with the thought of, how do I maintain it? That is not a good feeling. And I really want you guys, and like sometimes I hear people say, oh, I want to buy a brand new home. Fine. But again, the brand new home, townhome, single family home, condo, if you are going to do it, make sure it aligns to your budget and make sure you're not maxed out when you think about this being something that you own, because this is a story that I have heard. This guy, he leveraged like a new first-time home buyers program, got some incentives through buying the home, and a year into the living there, he wants to move back into the city. He very well can move back into the city, but would it put him financially at a crutch? Yes. So you don't look at the home buying process and create a handicap for yourself where then you can't actually enjoy the rest of your life. I have 2 homes. I have renters in those homes, and I live uptown in the city area because I like to be in the city. Am I also getting ready to move away from that? Yes, because when I think about financially where I want to be, spending this money in rent isn't serving me. And so I should go ahead and live in a home, because even if the mortgage is $1,700-$1,800, it's still cheaper than what I'm paying here to be conveniently located in the city. I cannot afford the homes that are located in this area. So that means I have to live a little bit further out. But if that means me living further out is creating financial security for me, I'm okay with doing that and getting a hotel when I want to come into the city. Clock that. Clock that. All right, so that is all around your mortgage and your budget. Again, when it comes to your real estate agent, I said I wanted to come back to this point. This is somebody that should be knowledgeable. These are some of the questions that you should ask. When's the last time you closed on a home? What were some of the challenges that came up during that home buying process? How many houses have you sold by yourself, right? Because sometimes they can use metrics where they co-collaborated with somebody else. No. What is your process for researching and finding a home that meets the needs, right? In reality, you need to know what else is your real estate agent willing to do. Are they willing to go on your behalf, FaceTime you in, look around, make sure they're knowledgeable, right? Are they looking at areas where it is telling before you get to the inspection part that the house is old, right? Are they knowledgeable about opening the cabinets in their home and making sure that there's no water damage? They're very simple, basic things, but your real estate agent needs to be knowledgeable because oftentimes they're going to negotiate what your offer looks like on the front end, and you don't need somebody that's going to say, oh yeah, they asked for $350, we're paying $350. Like, no. You need someone who's negotiating. You need someone that you're comfortable, if you're not in the room, they're speaking on your behalf. They're speaking on your behalf from an educated standpoint, but more importantly, in your best interest and not just trying to get a sell-off. Okay? Those are my tips. Those are the things that I hope you guys consider. This is one of, I'm sure, many episodes around real estate. If you don't get anything else from this podcast, I don't want you to be intimidated by the idea of home ownership. Until the next time, talk soon.